Did you know that major investment companies stated that that Tesla stock is a buy right now, while many people lost faith in the industry leader in electric vehicles after a difficult year? Others think that this is a great time to buy Tesla stock. You won't want to miss this information, given that Tesla's turbulent stock decline in 2022 caused shares to drop by almost 70. Although Tesla stock fell sharply last year, many Wall Street analysts changed their ratings and price targets to reflect the global economic downturn, concerns about Tesla CEO Elon Musk's acquisition of Twitter. However, some analysts view the low share prices as an opportunity after a difficult year for Tesla stock. Regarding the automaker's potential, one company has altered its mind, pointing out that the present buy-in price might be very low. In a note to clients a few days ago, an Edward Jones analyst upgraded Tesla to buy from hold and added the stock to the firm's focus list. Simplified as Edward D. Jones & Co. LP is a financial services company with its headquarters located in St. Louis, Missouri, in the United States. Edward Jones has 18,000 financial experts available to assist clients, providing a personalized approach to investing. Earlier this month, NCNBC reported that Edward Jones analyst Jeff Window lifted Tesla from a hold to a buy recommendation. The announcement coincides with a sharp decline in Tesla's stock price over the past year, which has alarmed previously pessimistic analysts like Window. The analyst noted that while Elon Musk's time spent managing Twitter and concerns about slowing may put pressure on near-term auto sales, we think the market for our electric vehicles will continue to grow as a result of international regulations. The growth of electric vehicle technology is being driven by global regulations on emissions and mileage. As competition increases, we anticipate that Tesla will maintain a strong global presence in these markets. According to analysts, Musk's decision to step away from Twitter would benefit Tesla, and the company should also benefit from new products and technologies that increase profitability. They contend that software-based or subscription-based programs like fully autonomous driving are particularly crucial for Tesla since they are anticipated to yield higher profits. In addition, Tesla is attempting to cause an increased manufacturing efficiency, particularly through continuous battery design advancements that should lower costs and boost profitability. The analysts further Window expressed their conviction that Tesla can capitalize on this growing market with the introduction of its new products. We believe that the market's assessment of Tesla's share price undervalues the company's prospects for sustained growth, due in part to changes in investor perceptions of the company's future, which is dependent on the expansion of the EV market. Tesla has experienced above-average price movement both up and down in comparison to the market. Tesla's continued dominance of the EV market and the achievements of its recent commercial endeavors. In a note to clients, Window described Tesla's stock as looking affordable given the potential for the company's long-term growth. He also said he expects the automaker's EV batteries and Tesla's full self-driving FSD beta to continue improving. Additionally, Window discussed Tesla's plans to launch new products this year, including the upcoming Cybertruck and the possible rollout of an updated Model 3 design. Later this year, it's important to note that while the Cybertruck is coming several years later than Tesla's other products, both of which could improve Tesla's market position this year as more competitors enter the EV space. Although the stock fluctuation this year has been striking, it is important to note that Tesla is still the market leader in EVs, and the success of new enterprises ultimately depends on investor confidence. Tesla's price fluctuation, both up and down, is above average compared to the market due to notable changes in investor sentiment. Undoubtedly, 2022 has been a difficult year for Tesla, as the company's stock fell by 65, which was made worse by rising interest rates. Despite CEO Elon Musk's share sale and worries about cooling demand, the electric vehicle EV market is expected to increase over the next years, and Tesla is well positioned to manage new competition. Other automakers. Musk has also stated that he will not be selling any more Tesla shares for the next 18 to 24 months. However, it is important to remember that not only Tesla saw a decline in stock value last year, the stock market as a whole saw a decline in 2022. And within the auto industry, the stock prices of every automaker experienced a decline. Major players like General Motors and Ford saw a drop of about 40, while startups like Rivian and Lucid saw a drop of more than 80. The same challenges that the overall economy faced, inflation and rising borrowing rates, affected all automakers. In 2022, they also experienced a scarcity of parts, which kept dealers unusually barren lots and exorbitant car prices at the end of the year, may be deterring potential customers overall. According to estimates from Cox Automotive, U.S. auto sales will decline to decade lows in 2022. Nevertheless, the automaker's flagship SUV, the Tesla Model I, outperformed the Honda CR-V U-Rest, the top 10 best-selling cars in the country. This achievement marks a significant milestone for the company's growing appeal to the general public. The automaker also opened 2 factories last year, one in Grünheim, Germany, and the other in Austin, Texas. Both plants are expected to continue ramping up Model Y production, and in the past few months, each of them reached a milestone of 3,000 units weekly output. As a result, many people believe that this is the ideal time to invest in Tesla stock, which is currently trading at, although Tesla stock has never been this cheap. There are a few compelling reasons why. Tesla stock had a difficult start to the 2023 trading year, 12.2%. And at one time during the session, shares were down as high as 15. Tesla's dismal Q4 2022 delivery figures, which were announced on January 2nd while markets were closed, played a major role in the sell-off. Tesla sold 1.314 million cars in 2022, setting a record with 405,278 sold in the fourth quarter alone, according to several experts, including Wedbush Securities. Dan Ives had anticipated a Q4 delivery figure of between 415 and 420 zero units, but Tesla produced 8.5% more units than it delivered for the quarter. It is unclear whether this discrepancy between production and deliveries was caused by declining demand or logistics problems. But either way, the lower than expected delivery numbers add another reason for concern to a stock that has dropped 59% the last 3 months, according to an expert. Investors have high expectations for Tesla over the past 3 years and have assigned it a correspondingly high valuation. However, for those who think the company and DB sector will continue to grow, the 65 drop in the stock price in 2022 offers a compelling opportunity to invest in the industry leader. For example, the company's recently released fourth quarter car delivery data showed that despite the demand being influenced by rising competition, weakening global economies, and the effects of COVID-19 spreading in China, there was a shortage in deliveries. Despite this, the company's growth is still robust. This led investors to conclude that Tesla might not actually meet its prior projections of an average growth of 50 over the next few years. Nevertheless, even if Tesla grows earnings by only 30, it was recently priced at a price earnings to growth ratio of below 1.0 based on 2023 estimates. Tesla's production increased by 47 in 2022 compared to 2021, but deliveries increased by only 40. Long-term investors should buy more shares now, but there might be greater opportunities to do so later, and Tesla stock might new all-time highs in the future. The issue with rapidly expanding stock prices is that the firm must meet high targets in order for the value to make sense. Despite how remarkable Tesla's development has been, a combination of external and internal obstacles is making those high targets less realistic. It's hard to predict with any degree of precision what Tesla's stock, like any stock, will do in the upcoming months and years due to missing delivery expectations combined with the potential for a recession. But Edward Jones, analyst, when Dao's bearish outlook shifts to a bullish one, balancing Tesla's long-term prospects with its current stock difficulties, resulting in a cheap buy-in price that may represent a significant chance for investors to subscribe to Tesla shares at this time.